Welcome to another episode of Real Estate Investing Explained. Here's today's question. You've mentioned deferring your mortgage, and I've heard some programs that are potentially coming out where homeowners are going to be able to do that, whether you're a landlord or just a primary residence owner. You could defer that. Do you recommend that people take advantage of that? Because I've heard some people say, well, I have reserves and so I can use that money to cover this. But then I've also heard some people say that you should take advantage of that opportunity. Even if you have your reserves, you don't need to deplete your reserves if you have the opportunity to defer your mortgage without any hit to yourself. Where do you fall on that?
I would defer. My job in a recession is not to maximize investor revenue. If you're somebody that wants to invest with me, please understand my philosophy. In a good economy where there's GDP growth, no recession, my job is to make you money. In a bad economy, my job is to preserve your capital, is to preserve your principal. And so I will take any option that I can get. And I mean, what's the downside? What does mortgage forbearance really mean? They take this month's mortgage and add it to the end. So maybe 3 years, 5 years, 10 years from now when my loan is ending, they add it over there. So now my loan is a few months longer. If it buys me insurance today and allows me to maintain cash flow, I'll take it.
And in the grand scheme of things, I mean, a lot of people probably aren't even going to hold that mortgage to the end anyway.
Honestly, as long as I can get through this without any damage to our properties, we're all going to make more money than we projected. Why? Look at the interest rates. They're ridiculous. They're completely obscene. Now, for the moment, believe it or not, apartment interest rates are going up because there's a lot of panic in that marketplace. But in 4 months, that panic will settle and we'll go back to being normal. And when that happens, we'll still have the low interest rates. Because once you cut interest rates, the Fed, once they cut interest rates, it usually takes them a year or more to pull them back. Usually takes them, 2 years. But even if we have a year, now we have a healthy, growing economy in Q4 where the interest rates are still really, really low. So a buyer really wants to buy this asset. And if I have the ability to refinance, I'm gonna pursue that in Q4 or Q5.
That's all for this episode of Real Estate Investing Explained. Be sure to follow me on Instagram, Twitter, and Facebook, or subscribe to our YouTube channel to get even more free content.